Well, good weekend. Ira Epstein with your weekly edition of your metal market wrap-up. And this wrap-up is for Friday, and we are now at the 23rd of June, 2023. So, my friends, what a week. I mean, it was only 4 days, but 2 days we had with Fed Chair Powell in front of Congress. We had the markets reacted to central bank after central bank making decisions. Turkey doubled its interest rate almost. We saw Norway go, Switzerland go. We saw the Bank of England raise its rates. So now what do you do? Well, inflation is still the enemy of the day. We don't know what our Fed's going to do. The naysayers came out in big ways today. Again, I'm watching them. We're not going to see any more rate hikes. The Fed is said and done. Okay, they must know the reports that not the rest of us have seen. The one thing we are seeing is industrial production around the world is in contraction. Service inflation is still there, but it's not running. Is it starting to crack a little bit becomes the question. Wage growth isn't as strong as it was. You can't get away from that. It's the way that it is. In the gold, it got smashed down hard this week. And it managed to rebound today, in part because bonds and notes both had a bit of a reprieve. They were able to take away some yield that they've been putting on. However, silver continues down. A copper market is looking that China simply hasn't done enough. Another developer in China, listed, by the way, on the Hong Kong Stock Exchange, declared after the close they can't pay their bills. These are big monies that they owe. They're not going to meet their debts, and people can have the properties back and so on. That has to come to an end in order to make property something that people want in China. And they've got to figure a way to do this. They're trying. They've attacked, if you will, how to make cars affordable, electric vehicles. They've lowered interest rates on just about every product that they have by about 10 basis points, but they haven't hit the property market or figured a way to get the Chinese consumer to spend. And that's going to be difficult because they have long memories of what COVID did, and they want their money in the bank. Dollar. Even with the dollar rally, the gold stayed up. So on a weekly basis in gold, what did we do? We lost 2.25%. That's on the monthly, I take it. And we're not through with the month. It could still be positive. There's one more week left. When we look at this line that I drew, I remember drawing it from that settlement price. We're in June. I wonder if it was February, something like that. And I said, it wouldn't surprise me if that's where on a closing basis, going to be a problem for the market. I didn't realize how right I would be. And I've left it up there because every now and then, even a broken clock gets right. You know what I'm saying? And bingo, I did get right. And this is still very much got downside momentum. Anytime you're under the 18-month average, and on this chart, weekly rather, anytime you're under the weekly average, you're looking for the market to say as a filter, you don't want to be long. Think of it that way and you understand what I'm doing. When you're over it, think to be long. Think to be short when you're under it. Traders don't like simple things, but I do. When I take a look at the weekly bar chart, you're falling down rather hard right here. You have a pattern of lower highs, lower lows. What's that the definition of? Ta-da! Bearishness. In order to negate it, you got to take out 1969.80s. 1969.90 would do it. If the market falls from here, potential downsides are 1834 to 1781, but the more likely supports the Bollinger Band, and that's over here at the 1834. It ties right in. So if there's going to be downside and you don't take out this 1969.80, between there and there, that's the potential target. What about momentum? Well, the good thing for those that say, I don't think it's going that far, you may be right because you're in oversold territory. I define in the slow stochastic numbers. There's two. There's one called a K and a D. The whole difference is one looks the same formula. At 3 weeks of data on a weekly chart, the D line looks at 5. Do you understand it? That's the whole thing, and the lines will crisscross each other. And the momentum is pointing down on it, but oversold. Oversold doesn't often attract new selling. In the gold-silver ratio, if I backtrack with you just a bit right here, This is how the market looked on the week of the 16th. If you get over this number, you don't want to be any longer short silver, or rather long silver versus gold, because the higher it goes, you need more ounces of silver to own gold. The daily chart turned on this, and it's been the warning sign. When I come back to this chart, you can see how it moved up this week. Same thing. So until it gets back under this low, silver loses to gold, is my theory. When I look at the silver, look what you fell into. Two areas of major support. First challenge again of the 100 and 200 week. Now we've been over the 200 since back here, literally in January. So this is the first challenge of that. If it lets go, you open the door up for 2044. The bears have control until the market gets back over 2462 on that chart. In the copper, this has been a bear market rally and no more on a weekly chart. No more than that. The market correcting an oversold condition. Is it oversold? Well, none of the numbers are under 30 anymore. Number two, on the chart, you got to always pay attention. What was this last rally high? You didn't take this out at 398.30. I think the pros sold on a weekly chart into the 18-week average, and I think that's where they're sitting right now. They got about a dime in it if they sold that. They won't want it to get over this week's high. That would change some of the momentum in the chart. So be on the lookout. And if it doesn't find support, it's down here. Now, the London Metal Exchange is seeing an awful lot of demand for the stocks of the silver. I wrote about it this week. 62% is accounted for right now. That's a lot. Is it going to be taken, or did somebody play a game? And that's what I wrote in my newsletter. I said, did they play a game to make everybody scared that they were going to take it, and suddenly the warrants come back for that? That's what they're called if they're available for shipping again. In the platinum, I've been a bear, as you know why. Electric cars, boom, I think this is in trouble. I'm looking for this number to be hit, but it is an oversold market. No, I'm not telling clients down here to go short. It was back here that you could have. Again, the first challenge, though, was a difficult one. Of the 200 and the 100-day averages, they've given that up, so this market's got itself into a problem zone. I'd be very, very cautious. Last, in the dollar index, we're looking at a market that has to determine what does it do against that 18-week average of closes. It's not trending on this chart. It has a higher high, a lower low. It found its support against the first challenge of the 100-week average in the Bollinger Band. It's come up, but it hasn't told us what to do from there. And I think that's the hardest thing that you have to figure out where you're at. Which takes me to the point where I want to help you figure out your trading. And don't go away. This is pretty important. At 5:15 in the morning, Monday through Friday, I'm at my computer recording. Going through 40 charts, I make a quick recording for you, and I cover a whole slew of markets. I start off by telling you what are the reports for the day coming out, what are the estimates on that report, is there anything that's happened in Asia and Europe and things to look for, and I cover the whole slew of commodities. Then we go into the charts, and I'll give you both daily and weekly charts. I rotate back and forth all the time, and we're going to be talking about all the aspects of technical analysis, putting everything together that I know and showing it in a chart and giving you reasons that I'm either bullish, bearish, I say buy here or sell there, I'm right here, I'm wrong there, and I track what I'm doing. So you'll see that as well. I do the same thing in the spiders and so on at 9 o'clock because all the government reports are out by then, and now we can, no more reports to worry about. Now let's move on typically. Yeah, you may get a Fed person that speaks or that, but the government reports are all out of the way. How do you get this? It's so simple. You see the blue button right here? Give it a click. That'll take you there on YouTube. You can call my staff. You can go to our website under the word research, or you can come up here, give a click. You'll see an icon if you move up there. Click on it, take you right to the area you have to be. I hope you enjoy it. I'm Ira Epstein. Have a good day.